What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday, and it's time for the FANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FANG stocks. This week, we are finally realizing and seeing that pullback that we've been maybe talking about for months here in the mega cap tech stocks. How much further will the major FANG stocks continue to pull back? We'll talk about that on today's show, but we better not waste any more time and kick things off like we always do with Meta Platforms. Start the week at $313, slid down by nearly 4% to finish the week close to $301 per share. Elon Musk and Mark Zuckerberg are taking their beef to Italy, potentially for an epic location battle of the two tech giants. Elon Musk saying that, quote, everything in camera frame will be of ancient Rome, so nothing modern at all. However, the Prime Minister of Italy said they have not agreed to holding the fight in the great city of Rome. As always with Elon Musk, he says things that can't be corroborated, but it looks like to me that the two tech billionaires are going to eventually battle it out, and I can't wait. Now, Meta is said to build only roughly 1,000 units of its new AR glasses. Now, we talked about this on last week's show, the fact that they rolled out these devices with Ray-Ban, and it appears that just a small fraction of users regularly use the glasses. This is a new kind of upgraded version. In fact, the lenses contain silicon carbide, which is the silicon material that is found in most electric vehicles. Looks like there's also going to be a wristband that is going to help control the glasses wirelessly to take pictures and videos and maybe eventually display something augmented on the glasses. I tell you what, at 1,000 units, that might end up being a collector's item one day. IBM to make Meta Platforms' large language model Llama 2 available on its Watson X AI data platform. Tell you what, IBM has been on the forefront of AI, but IBM is one of those companies. They're on the forefront of everything, quantum computing, pretty much anything you could possibly think of. And the stock has not really done a whole lot over the past decade or so. Moving on to Apple, start of the week at 180. Wow, this one down 1.3% to finish the week. We'll just call that $178 per share. Apple and Broadcom may have reached a potential settlement with Caltech in a patent case. The California Institute of Technology has alleged that both Apple and Broadcom infringed on some Wi-Fi patents. This was many years ago, back in 2020, and it appears the trio have settled on maybe a potential settlement. Now, Apple wins a reprieve in the Supreme Court against the Epic video game maker on those App Store, quote, tax or those payments or the 30% fee that Apple takes for every dollar that flows through the App Store. Essentially what this is the Supreme Court denied an injunction take effect. An injunction would have made Apple change its payment practices right away. Instead, this will delay maybe potentially the inevitable there. Moving on to Amazon, start of the week at 140, down like pretty much all these stocks, about 1.4% to finish the week close to 138. Amazon is the latest heavyweight in talks to anchor ARM IPO. ARM is a licensing firm that licenses its designs to Apple, pretty much any smartphone maker. It is also making its way into PCs and, more importantly, actually laptops. There are some server designs that rely on ARM devices as well. There's a new open source or a newer open source protocol called RISC-V that probably aims at threatening ARM's stranglehold inside of kind of the mobile compute realm of chip making. You had Nvidia try to buy ARM Holdings many years ago, or several years ago, not many. And now the company is knocking on the doors of Nvidia, Google, Intel, and now Amazon to try to be an anchor or lead investor. I think the fact that they've had to go to so many of them probably doesn't bode well. I would not recommend jumping in on that ARM IPO from day one. Holiday sales grab. Amazon plans to hold a major shopping event similar to the way they did last year in the month of October, essentially maybe kind of an early shopping season or essentially a Prime Day right before the holiday shopping season. Amazon said poised to meet with the FTC next week. The FTC is planning potentially a broad antitrust lawsuit against Amazon, with the crux of the argument being that the company favors its own products over outside sellers on the platform, which the FTC, if they bring that case to Amazon, would probably win it, honestly. Now, moving on to Netflix for the week at 435. This stock down over 3%. Finished the week at 421. The writer's strike and the actor strike in the great city of Hollywood has now stretched out for over 100 days, and it doesn't appear that there's any end to this strike. This is one of the longer strikes on record, and at this point, it's absolutely going to affect TV and streaming on Netflix, likely starting as soon as next year. Walt Disney rose earlier in the week, but then slid down as Wall Street started digesting those Q3 results, which we'll have a video of later this weekend, and the guidance for Disney, a turning point, but probably as it relates to Netflix, and most importantly, Walt Disney deciding to raise the prices on most of its streaming services, which in my opinion make Netflix look like maybe a better value than it already was. Moving on to Nvidia, and speaking of moving, stock started the week at 454 and down 10% this week, as we are just 12 days from earnings at Nvidia on August 23rd. Chinese companies ordered Nvidia chips worth $5 billion amid fears that the United States government is going to continue to ratchet up the tensions and not allow the great country of China to continue to acquire AI-capable chips. Several companies in China ordered a $1 billion worth of A800 processors from Nvidia, and they committed to buying an additional $4 billion sometime in 2024. Keep in mind that Nvidia is a company that does like $13-14 billion in terms of quarterly revenue. $5 billion is actually a lot to this company. Now, Nvidia introduced a new super chip this week, as the company announced, they had like 10 different press releases on a single day. Companies trying to jam these in, I think, before the quiet period begins on earnings. They announced their next generation GH200 Grace Hopper super chip. Primarily benefit of this one is the fact that you have a lot of memory on here. It's going to allow you to, load that data up and kind of train it back and forth through the GPU chip. And I can imagine these will be wildly popular, but at the same time, probably hard to get and very expensive. The AI bubble is in its later innings. That's according to Morgan Stanley. And look, it could be true that we're in the later innings of kind of the hardware AI bubble, okay? And not that sales at Nvidia, I'm not projecting sales at Nvidia will slow down. I think the first press release that we read, that China pre-ordering essentially 5 billion of these chips, and the next chip is going to be very well received and very well purchased. But what's going to happen is you're going to have more competition come onto the marketplace. The GPUs that are already on the marketplace, look, they don't have an expiration date. They don't expire. Companies are going to use them for several years. What we could be in the later innings of is kind of the mega high gross margins that Nvidia realizes. I think they're running at like 70% gross margins on a lot of their products. That could contract as you have AMD and others coming onto the market with, competing products. Whether or not they're competitive, I don't know, but it should squeeze down margins. But on the back half of this hardware build out, folks, you are going to have essentially the SaaS revolution part 2. Anybody with a SaaS service is going to be able to layer on an AI service that you're going to be able to charge some money for, and you're going to have a huge wave of software coming online sometime next year. Moving on to Google, started the week at 129. This one actually held up nicely, basically flat to finish the week. A big expansion for Cruise, which is owned by GM, and Waymo, which is owned by Google, to have driverless vehicles 24/7 in the great city of San Francisco. Right now, there are a limited number of hours that the companies can operate their autonomous vehicles, but now they're going to be able to drive in inclement weather and speeds up to 65 miles per hour. That will be Google, whereas Cruise will be limited to speeds of just 35 miles per hour. We'll see how this expands through the state of California, as San Francisco certainly the testing ground for it. Google and Universal Music working on licensing deal for AI deepfakes of songs. And so we'll see how this goes. The music industry certainly being shaken up by AI, and maybe and potentially in ways that are beneficial to the artist. Moving on to Microsoft, start of the week at 329, slid down 2.6% to finish the week at 321. ChatGPT uses rise amongst corporate America. That's according to Reuters. U.S. corporations reporting a 28% usage rate regularly of ChatGPT. Folks, that stat is going to continue to go up. Whether or not they use ChatGPT or something else or a competing product or a parallel product will remain to be seen. But at some point, you're going to be darn near close to 100% in corporate America. Microsoft's role in the data breach to be part of a U.S. cyber probe. Earlier this year, a breach of email accounts from U.S. government officials was carried out by allegedly Chinese hackers, and Microsoft's role in not preventing it is going to be investigated. Microsoft to bring Bing AI chat to other browsers. If you like Bing, you're going to be able to get it on third-party browsers and mobile devices as well. Moving on to Tesla. Start of the week at $250, slid down about 3% to finish the week close to $242 per share. Again, we talked about this at the jump. Elon Musk and Mark Zuckerberg looks like they're taking it to the mat. Who is your money on? Let me know down in the comments below. I'd like to interested to see who you guys think will be the winner of the battle of the billionaires. Big expansion for Cruise and Waymo. Also something we talked about earlier in the show as it relates to Google. This also maybe relates a little bit to Tesla as well, as they obviously have self-driving ambitions. It really, in my opinion, doesn't necessarily matter who the real first mover is here to get cities or jurisdictions to approve this thing. Once you have it approved, it's similar to like the iPhone, okay? The iPhone was not the first smartphone, okay? In fact, several years into its release, it still wasn't the dominant smartphone. It didn't overtake BlackBerry until several years after its initial release. And so I see a similar thing happening for driverless vehicles. While Cruise and Waymo might have an advantage in some ways, Tesla could very easily catch up if it needed to. Now, big story of the week for Tesla is its CFO, after 13 years, decided to part the company. Some people theorizing that maybe he will go and take the reins over maybe like at a company like PayPal, which has been looking for a CEO for a long period of time. It's never good when a big company is looking for a CEO for a long period of time. They've been knocking on a lot of doors over there, and they haven't found a taker. Maybe the Tesla CEO will end up there. We'll see what happens to that. Now, we'll get to the Tesla chart in a moment, but we'll start with the S&P 500. And folks, we have put on our volume profile. I like to slap this on here as you start to make pullbacks. It shows you the areas where you should have some demand. The S&P 500 should have some demand right at this 4,400 level. If you break through 4,400 on the S&P 500, I think we're probably doing a bottom of the channel retest. That'll take you probably south or just right around 4,200 on the S&P 500. These pullback, make the decision right now, folks. And I know I've said this a couple times here on the channel. Make the decision right now to buy these pullbacks. Not asking you to open up a margin account and do naked options or take all this risk. No, you buy these pullbacks. If you're a cautious investor, there are many stop losses along the way that you set, because if you break this trend, it essentially confirms that the uptrend that we've been in since October of last year, nearly a year now, that it's over. But the more higher probability is we pull back on the S&P 500 and then we move to a new higher high. So that is why you're going to want to buy these dips. Now, moving on to Meta, reach some overhead resistance, as you can see clear as day right here. Again, folks, this is not technical analysis. This is a chart of price. That is all it is. And that, quite frankly, is what the stock market is. It is buyers and sellers at a price. If you are not looking at price, I don't know what you are looking at in the stock market. At $328 per share for Meta, That was a price sellers like to step in. Shares got rejected. There's areas in the 275 range with Meta, which would be okay. Wouldn't be an area where I got super aggressive. There's other stocks that we'll talk about here where you could probably be a little bit more aggressive. Now, Apple making a major move down from the 190s down to about 177. This is actually the first area. If you felt like buying Apple, you probably could. Apple is in a unique situation where it actually made a new higher high. So not only are you in what I would call maybe like an intermediate uptrend and you're kind of having a pullback in the midst of that, obviously too, with all of these stocks, you're pretty much in a forever uptrend as well. But every trend other than like the micro trend is up for Apple. And so you can buy these pullbacks. This is the first area where you'd like to do that. If you wanted 10 more shares or 10 shares of Apple, it's an area where you might buy one or two of them. Now, moving on to Amazon, we talked about for probably months on this channel, where this stock stalled out was very, very predictable. There was some overhead resistance. Looks like to me, though, if these rallies continues, Amazon has a destiny getting back here to like the 160 range where, again, it'll meet some overhead resistance. This stock eventually pushes through that area. You are absolutely going back to all-time highs. Moving on to Netflix, also experiencing a pullback, met resistance at a very logical area right here at, call it about $500 per share, is pulling back. Should be support for the shares down here just south of $390 per share. Nvidia also looking like it's going to roll over. The problem with Nvidia is it just has not had a lot of time to have a lot of price accumulation here. Obviously, as you can see with the volume chart, there's just like pretty much nobody that has bought shares of Nvidia at these levels. You've got a gap in the price chart. Looks like to me, Nvidia wants to fill that gap, complicating the situation as the company reports their earnings just 12 days from now on August 23rd. Pullbacks in Nvidia could actually be rather significant, just a halfway retracement of the longer. This stock's in a longer term uptrend, like every one of these stocks. The problem with Nvidia is it's gone on one of the largest moves, and so the pullbacks could be relatively steep. I could see this company getting back down south of $300 per share, which means you got a long ways to go, but that area probably should be bought. Google has an interesting kind of volume profile. You have actually pretty equal distribution of purchases of the shares, which might explain why shares of Google held up rather nicely today. Shares are clearly still in a shorter term uptrend, which is very, very steep, and pullbacks in Google should be bought. Moving on to Microsoft, also met resistance at a very logical area, right where the shares did a U-turn here, essentially at all-time highs. Now, it did technically make a new higher high, so this is still in an uptrend. If you look at this purple line, this goes back for almost ever for Microsoft. As you start to approach this purple line, which is really anything south of where the shares is right now with Microsoft, that area also should be bought. And then finally with Tesla, we've been talking about it for a few weeks now after earnings. Share that the company looked like they wanted to pull back. You have a beautiful area of like triple support here at about 200, 210 on Tesla, which should absolutely be bought as well. Make the decision now, folks, because, look, the S&P 500, if it makes the move that I think is actually probable at this point, the S&P 500 could draw down 5, 6, 7%. CNBC is going to be talking about a recession at that point. They might even be doing those market in turmoil specials. The bears are going to come out on TV and say, ha, 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 I told you so. It's actually going to be difficult to buy when the market makes that move. You can take comfort in understanding that it's okay to buy something and be wrong. You can get stopped out of these stocks. You can put stop losses underneath it. But the bottom line, folks, is the markets are in a shorter term uptrend. You buy shorter term uptrends. If you don't have the courage to buy the shorter term uptrend, I actually would just recommend you getting on kind of an automatic investing plan where you just buy the S&P 500 or whatever fund or whatever ETF or whatever stock you want to buy just on a regular basis. If you cannot buy the upcoming dip that we have in the stock market, I would quit trying to invest in the stock market. I would just set it on autopilot. I would grab your golf clubs or your tennis racket and just ignore it. For the rest of you, be prepared. You've got some great opportunities coming up here very soon with the vast majority of these stocks. Hopefully, guys, have a wonderful weekend and a safe one. We'll be back next week. But until then, good luck with your investments.